Good morning, welcome to this update on Friday the 22nd of July, brought to you by Phoenix Blue. I'm Tom Colley, and I'll talk to you about the markets and the news this morning, and we'll start over with the news as we often do. UK retail sales came in yesterday below expectation. We then had the big news, or what was potentially the big news of the day, which was the ECB, the Euro minimum bid rate, and the ECB press conference that followed. As anticipated, very little came out of this. We saw no change in the rates. Our old friend Mario Draghi was boring us to death in the press conference. Very little came out of that. His comments on Brexit was they hadn't yet seen any data that was significantly negative at this moment in time. He talked about allowing the existing measures to take effect, which he said before. He also talked about governments underwriting non-performing loans in European banks to allow them to trade more effectively with those loans effectively off their balance sheet, which basically means selling the loans to the government, who then tax the population to pay for it. We also had the Philly Fed Manufacturing Index in, and that came in below expectation for the States. Unemployment claims, however, were below expectation, which is a good number in that respect. Going forward to today, we have manufacturing and services PMI at 9:30 for the UK, and this afternoon we have core CPI and core retail sales for Canada. Over the weekend, we have the G20 meetings. That's the meeting of the governments of the 20 biggest countries or biggest economies of the world, and we'll have a little bit more of a talk about that when we look at the dollar-yuan Chinese exchange rate in a moment. Okay, so doing what we often do on a Friday with the Asian markets, take a weekly look. They've had although it's not the end of our trading day, they've had their trading session and is now over. We saw previous on the Shanghai Composite, we saw 3 really bullish weeks. This week we've had a bearish week. However, it looks like it's potentially a retest of this trend line here. So we could look for a response to that and back to the long side next week. So I'll be watching that with interest in that respect. Over on the dollar Chinese exchange rate, the dollar yuan, bearing in mind this is dollar strength, dollar strength, and down is Chinese yuan strength. So we've been seeing a devaluation of the yuan, which on previous occasions has upset the rest of the members of the G20 to the point that has been raised as quite a strong point. It's interesting that over the last few days the value of the yuan has increased slightly below this previous high weekly close at this level. Not wanting to be too much of a cynic, but the timing convenient so that the Chinese can say at the G20 meeting, oh yes, but it's below where it's been before. Okay, over on the Nikkei, well, we've had a high test bar so far this week. The main reason for that was yesterday, Governor Harada of the Bank of Japan said in a statement that there would be no helicopter money for the Japanese economy. Now, helicopter money is a metaphor for throwing money more indiscriminately at the market, or printing money and giving it or introducing it to the market in a less discriminating fashion than had previously occurred. There was anticipation in the market that this helicopter money would happen, but that clearly appears to have been put out of the picture. There will be further easing methods from Japan, but that won't be one of them. They seem to be keeping that in their armoury should the situation actually turn into a crisis from their perspective. This was also reflected over on the US dollar yen exchange rate. We've seen a engulfing bar reversal from this level in confluence with the upper level of this channel. Now, if we see further downside on this, which when we go over to the dollar index, I'll explain why I think that might be a strong possibility. We could well see this level here at $99 retested. This was a level where immediately after Brexit, we believe we saw Bank of Japan intervention, very specific intervention at that point. So we could certainly expect to see intervention again at that 99 level, at the 100 type level, if we get a weakening in the dollar, which allows the yen to strengthen against their objective. Now here is the dollar index. We're at the top of a channel. If we break this channel, we clearly will have significant dollar strength at that point. However, if we come back down to the bottom side of the channel, or we even range across to the bottom side of the channel, that will work against the yen and allow it to strengthen. I've also got marked on here a rising wedge. That is just to give me an early indication that potentially if that's broken, then we could see further downside on this, with the implications for the yen and the Nikkei that I've already mentioned. Now the next few charts are going to sort of just reinforce that possibility. We had the ECB press conference yesterday. Very little came out of it. We saw a small spike down, and we have here potentially a flag on the euro. That would potentially coincide with a weakening on the dollar, allowing for what we would expect for a falling flag is a breakout at this level, a breakout to the long side. Over on the Aussie, again, we're at a level here. We've got a critical level through here at 7450. We've got confluence with a trend line. That's been rejected. Again, it will take dollar strength and a breaking out potentially of the channel on the dollar index to in the short term, see further downside on the Aussie dollar. Similarly, over on US dollar CAD, again, we're around approaching what is a really significant level here. If we see dollar strength, we'll see a break above that. Obviously, if we don't, we'll see the price pull back. Over on gold, yesterday we saw a significant pullback. We're short this market. We saw a nice move down the day before yesterday. Price has pulled all the way back to the top of this range that I've got marked on this daily chart here. We are still just in the order that we have to the downside, looking for price to come back down to the bottom side of this channel here. On the S&P, the information that came out of Japan about the lack of helicopter money potentially is the reason for us having a pullback on the S&P. The S&P has been, and all worldwide indices have been rallying on the hope or the expectation of further quantitative easing, specifically from Japan that we've already talked about, and also from the UK in respect of, and even the Eurozone in respect of the recent Brexit vote. Okay, I hope you like what you've seen there. If you would like the opportunity to come and trade with us for a 4-hour period in the next few weeks, August the 24th is the date, an afternoon in London. You'll have the opportunity to trade with alongside our two most experienced traders. The opportunity to ask as many questions as you want. There will also be a number of existing Phoenix Blue members around for you to discuss how they've experienced and benefited from the techniques and the analysis that we teach. If you would like to come to that event, either visit the website phoenixblue.co.uk or email us directly at info@phoenixblue.co.uk, and we will send you an invite to that event with all the relative details, and would be really happy to see you. Okay guys, that's the end of another week. We have had an interesting week. Potentially not the most profitable week, simply because the markets, we are in that summer period. There is somewhat of a doldrums scenario around, and even though we had announcements from the ECB, we saw very, very little result from that. Let's hope we can see something a bit more dramatic next week, but in the meantime, have a good weekend. Prepare for the week ahead with your analysis to be ready to be in the markets as and when you see fit from Monday next week. Okay guys, take care. Goodbye.